Welcome, all of you. The room is full tonight. You can't see it on camera, but the room is full. So thank you for coming out to our first-time homebuyer class. I'm Ryan.Moseley, and we have Ryan Rourke, Christina Hernandez, and Chris Moynihan, right? Yes, Moynihan, sorry. So tonight what we're going to talk about is a little bit of basics of what each of us do and how we can help you out through your home buying process. You good? Okay. Feel free to jump in with questions at any time, and we'll be able to help you out. I'm going to start off today and just kind of get you guys thinking in the right frame of mind. Tell me what your dream home would look like.
Lakefront.
Lakefront.
Wraparound porch.
Wraparound porch. Big. A moat.
Movie theater.
Movie theater. Excellent. Those are all great things, but are they probably going to be your first home? Maybe not. A kitchen? Yes, you'll probably have a kitchen, a big kitchen. What are some of the fears, challenges with home buying?
Down payment.
Down payments.
Mortgages.
Mortgages.
Affordability. Repairing things.
Repairing things. Maintenance, yes. All of those are challenges that we're going to touch on tonight. So I'm going to go first with a little bit of the buying process, and then we'll turn it over to Christina, who's going to talk about the financing, the mortgage part. And then Ryan will talk about insurance, and Chris will talk about inspections. So why do people move? What do you think are the top 2 reasons why people move?
Their parents kick them out.
Jobs, their parents kick them out.
Job and
Family, closer to friends and family is the number 1 reason why people move. The second reason is they want to be closer to work and recreation, things they enjoy doing. So those are the 2 top reasons. There's plenty of other reasons, but those are the big ones. So even if you're just thinking of looking and buying next year, it's never too early to start doing your research and figuring out what the market looks like. There's all sorts of websites where you can see houses that are for sale and whatnot. Start getting familiar with the part of town you want to live in, what prices look like, how big of a home you can get in the part of town, how updated a home may be or how old it is. Start looking at those things now, because once you do get to that final stage where you're ready to buy, you're already somewhat familiar with what your money can get in what part of town, things like that. So it's never too early to start looking. It helps you kind of refine and dial in what you want. Some websites, however, the big one being Zillow, is that they can be off by as much as 60% on their Z estimate. So don't just look at their information. Their information can be outdated. I've seen houses on there for sale that closed a month or 2 ago. They're not always updated. So try to use a local website such as NP Dodge or Berkshire if you want, but try to use a website that's more local and knows the market. So the beginning of the process is obviously identifying what you want, finding an agent that you want to work with, establish a working relationship with that individual. Early on, you're going to want to get your pre-qualification for your financing, so you know what you're looking at as far as payments, what your range might be for a purchase. Make sure you're doing all that in the beginning. Start looking at properties. That's where I come in, obviously. Writing an offer is the first step to owning a home. Usually requires an earnest deposit. The rule of thumb is 1% to 2% of the purchase price, so it may be $2,000, $3,000, $4,000. Having that cash ready and available for your earnest deposit before you get started is important. If your contract is accepted, great. That's just the first step. There's lots of steps through this process to closing. Any step can have its own problems and set you back or move you ahead. The biggest one after acceptance of contract is you have 14 business days to get your home inspection done if you decided to put in an inspection. You can do an inspection just for informational purposes and say, hey, we're not going to ask you to do anything. We just want to know what's wrong with it and have the opportunity to walk away if you want. So you can write up the contract to have those contingencies in place. If you do decide you want to walk away, you get your deposit back. So whatever you put down, if the inspection comes back and you don't want to deal with it, you can walk away, if it's written up that way. Then once you get past the inspection and you remove the contingencies, maybe there's a window that need replaced and the seller was like, yeah, we'll replace it or we'll give you a credit, whatever. Once we get all those contingencies removed, then we go to the next is getting the mortgage in place. And are you going to talk about appraisals a little bit? Okay, well, I will. The bank wants to make sure the house is worth what you're paying for, right? Because it's their investment until you've paid it off. So they're going to send an appraiser out who will look at the house, look at the purchase price, look at the houses in the neighborhood and say, yes, it's worth $300,000, or no, you've got some work that needs done. Maybe it came up in the inspection. It comes up in the appraisal, then it has to be dealt with because the bank's not going to move forward until they've either taken care of whatever issues came up in appraisal or adjusted the purchase price, whatever it is. So that usually is the last hurdle, and that happens usually after inspection, sometimes just a week before closing. So once the loan is approved, the contingencies are removed, then the title company takes over. They start writing up all the final closing documents, make sure that the titles and the deeds are all in place where they need to be, get it all put together, and then we have closing. You sit down, sign your papers, get your keys, which is the tail end of it. My role as a realtor is to help you identify what you're looking for in a home, help you identify homes to look at. Obviously, everyone's familiar with the online resources to find a home, but there's other tools that I have available. Obviously, just networking, talking with other agents within my office. Sometimes NP Dodge has their own listings that don't go out to Zillow and all the websites, so they're called pocket listings. So sometimes I can get a heads up on a home coming to the market and maybe get our foot in the door before it goes out to everybody. For sale by owners are a resource to find properties as well because they aren't marketed as well as NP Dodge's properties are, something like that, so you can find them there. Expired listings, maybe somebody had a listing and it didn't sell, the contract expired, well, they're still wanting to sell, so those are also ones that I can hit up. So buyer agency, as your representative, I have a duty to work in your best interest, to make sure that everything is going to benefit you. I'm here for the buyer, not for the seller in this case. I'm looking out for your best interest. I'm your single point of contact. Obviously, I'm available phone, email, text, whenever you want to look at a house. I can give you an overview of available properties. I can give you in-depth details on the properties, maybe how it compares to others in the house. Is this one, or in the neighborhood, is this one overpriced, underpriced, a good value? And I'm here to help with negotiations, contracts, all that good stuff. The first step, and this is something new as of last year, is regardless of what realtor company you go through, what realtor you have, you need to have an exclusive buyer agency contract, which spooks some people a lot of times because they're used to looking at a house without having to sign any paperwork. Well, now you have to have this in place before any real estate agent can show you a home. And in this document, I'm not going to go through it, but it outlines my responsibilities to you, but also how I am compensated. Most of the time, the seller will pay the buying agent's commission. Most of the time they do that. Sometimes they'll just pay part of it, and then you have to come up with the difference. But ultimately, this document is in place to protect your interests and make sure that you are familiar with my responsibilities for you. Do you have a question?
I do.
Yes, go ahead.
So what if I just met you? Don't know who you are.
Right.
And I'm going to sign an agreement for.
And that's happened quite often. And what I do in those cases, I'm like, all right, well, you want to look at this house? We'll write this agreement up for this house for one day. And then if you don't like working with me, kick me to the curb, whatever. Or if we continue, then we'll maybe extend it for 30 days if you're comfortable with that. So yeah, good question. You definitely don't have to commit to 3 months of a real estate agent that you just met because, you need to get to know each other a little bit and how you work together. Good. Yes.
Question. So let's say the commission, let's say the fee is 6% of the sale price. That is what the selling agent has in their listing agreement, and it's going to be split between selling agent and buyer agent, how often would you say the seller refuses to pay the buyer's agent? And
That's in the listing contract.
okay.
The listing contract says 6% or whatever percent, and in there it says specifically 2.4 or 3% goes to the buying agent.
Okay.
So they can't really go back on it at that point. Good question. Other questions? Okay, this is my last slide, so I'm going to hand it off to Christina, who's going to talk to you about the mortgage process.
Thank you guys for coming. I'm Christina Hernandez. I am over at CMG Home Loans. I am your perfect lender. I'll just be talking, or I guess, why am I here? I'm here to help with the mortgage part, to make it less scary, explain, what we have to do to get pre-approved, and then walk you through the next steps of when you go under contract and all that fun stuff. Before I start, I wanted to go over a few little mortgage words that might come up throughout the process that some people might not even realize is a thing. I know for the longest time, sometimes I was like, what are you talking about? So closing costs, that's going to consist of your lender fees and title fees. So working with the title company of your choice and what they charge to do all the fun paperwork. Escrow, I like to say it is a savings account for you for your property taxes and homeowners insurance that we do create for you at closing. So every month it gets replenished with a portion of your property taxes and homeowners insurance, so that way when those two items come due, they get paid and you don't have to worry about it. HOI, homeowners insurance. That is something that is required, and Ryan will be talking about for that part. PMI, private mortgage insurance. So that is insurance that covers basically the lender when you do not put down more than 20% on your loan. LTV, loan to value. So that is your loan amount over the value of the house. DTI, debt to income ratio, that's your total debt over your monthly income, or your total monthly debt over your total monthly income. And that's a big number that we take a look at for all loan programs. LE, loan estimate, that's something that you get that just breaks down costs of what it's going to be for your mortgage. Closing disclosure, that is something that you'll get towards the end. That's basically final numbers that, okay, this is what you're going to be paying at closing. PITI, principal, interest, taxes, and insurance, that is your mortgage payment. So that's what's all consisted in that monthly payment that you'll be making. Pre-qualified and pre-approved, those two, although they sound like they would be the same and mean the same, they're not. Basically, pre-qualified means you have given your application, someone's looked over and said, okay, I've looked over everything and looks good. Pre-approved is when you actually give your documents in. They've basically got the stamp of approval and yep, I've verified that yes, you make all this and this is what your debts are and this is what your assets are and you're good to go. You always want to get pre-approved because pre-qualified is just kind of like a word of mouth type of thing. So what a mortgage is and your monthly payment. So what is a mortgage? Does anybody know? It's a big loan, yes. It's a loan that you take out depending on the term for your house. It can be anywhere from 30, 25, 20, I think some do 10.
What about
50.
50?
We'll see. So basically what the mortgage is, it's consisting of your loan balance, your principal payment, interest, and then like we mentioned earlier, property taxes, homeowners insurance, and sometimes homeowners association fees. When we go through getting you pre-approved, we talk about that to make sure that it's something that you're comfortable with as far as monthly payment, because you do not want to be house poor. How much can you buy? So when you do the application, what we take a look at is what you make monthly. We do look at the gross monthly, not what you net after taxes and stuff. So we take a look at that and what all your monthly debts are. And when I say monthly debts, I don't mean like the total balances. I look at your monthly payments that you're having to pay. So your auto loan, whether it be $300, $500 a month, any student loans, any credit card bills. I don't look at the balances, I just look at what's required as far as monthly payments go. And then your credit profile. We do pull all 3 credit bureaus to take a look and see what the credit scores look like. A big thing with that, which I think actually I'm going to talk about next, is we want to make sure payments are on time and everything is looking good. Down payments, that it can be as low as 3% depending on which loan program we can get you qualified for. And then we'll go over that in a little bit too. Approval doesn't always mean comfort. Like I said, we don't want you to be house poor. I always like to go over what your absolute max buying power is to let you at least know, but I always don't recommend doing that unless you want to just be living in an empty house. Credit. I love credit. Credit's a beast, I always tell people. You can pull up Credit Karma on your phone and stuff, and it'll tell you one thing, and then when you go and get your mortgage credit pulled, it can be a completely different thing. Same goes with the auto loans that you go get. A big thing with credit that I like to tell people is you have to make sure your on-time monthly payments are made. Whether it's just, if you can just do the minimum, just making sure it's on time. Late payments stay with you for a very long time, and they bring down your credit scores. A big thing for credit usage, you want to try to keep your usage anywhere from 10 to 30%. There's kind of a little example. If your limit's 10,000, you want to keep your balance anywhere below 500. That just keeps the utilization low, showing the creditors that you are financially responsible. You can use it and then you pay it back. Let's see. I don't want to say that if you have a bad credit score, you're not going to be able to get pre-approved. There are times where we can get any as low as 580. We have done it where we've gotten an FHA loan approved at 504. So there are options, and if we can't, then I do like to always look at doing what's called a credit plan. And basically that can be something where it's if you pay off A, B, and C, or I shouldn't say pay off either. If you lower certain things, balances down, you potentially could boost your credit scores up. It could be anywhere from immediate to 6 months to 12 months. It just kind of depends. Down payment, the myth, you need 20% down. I remember thinking when I was younger, thinking, okay, I've got to keep my credit good and I got to save up and get 20% down, but that is not the case. You can have as low as 3% for a conventional loan, 3.5% for an FHA loan. And there are programs where you can bring as low as 0% down. We've got some programs within CMG that actually help out with that too. I try to tell and express to people that just ask the questions. There's options to be able to bring in low dollar amounts for the new home.
Question.
Yes.
Do you do first-time homebuyer grants?
We actually, CMG just came, I think it was last month. We do have a in-house program where it does have a grant that we can use for first-time homebuyers. Yep.
How much is that grant?
It is dependent on the individual, but I believe you can go up to 2% that CMG basically has a grant for.
2% of the
Purchase price. The mortgage process. This is a little bit. So once you chat with Ryan, you come give me a call. This is kind of how I try to set up the process for you. I love to jump on a call or in person if that works best for you and do basically a discovery call. My discovery call consists of, hey, what do you know right now about buying a house? If you don't know anything, that's totally fine. But if you have questions, what are your expectations? What are your goals for this house that you're going to be purchasing? And then next step is to get an application so that way I can review everything. I do ask to get documentation. I always say the rule of 2. So usually, or I shouldn't say usually, we need 2 years worth of residency, 2 years worth of employment, and 2 years, nope, those are documents. Documents consist of 2 months bank statements, well, I guess depending on the loan program too, and then 2 pay stubs. So I say 30 days is actually what, we're gonna be editing this out, aren't we? 30 days worth of pay stubs. And so if you're paid a month, you need 1. If you're paid bi-weekly, 2, semi-monthly, 2 as well too. So once I try to do my best to get everybody pre-approved within 24 hours. If you are self-employed, those are a little bit longer just because you have to take a look at tax returns and stuff too. So once you're pre-approved, everything's looked at, I give you your letter, you do the fun thing of house shopping. Once your house shop, oh, go ahead. Yes.
You just touched on it a little bit, but let's say a home buyer were to be self-employed, 1099.
Mm-hmm.
I know tax returns are going to be very important in that process, but what if they go 2 months at a time every once in a while without getting paid, right? So they're not going to have those pay stubs. Is that tax return going to be that only thing that you're looking at?
Great question. Yep, tax returns are basically what I'm going to be looking at. I don't need pay stubs. I will take the 2. I do have a spreadsheet that I look and pull out the numbers to basically average out over the last 24 months. There are some programs where, and depending how long you've been self-employed, that I can use just 1 tax return too as well. So, but yeah, I'm looking at just purely tax returns.
In 2 years.
2 years for FHA. Depending if you've been self-employed for less than 5, then for conventional I would need 2 as well. So. But if you've been more than 5 and we're going conventional, we can sometimes just get away with 1 year.
Thank you.
So, yep. Let's see, house shopping. Once your offer is accepted, we'll reconnect. I'll get your contract, enter it into the loan application to tidy up numbers to match exactly what's on your guys' agreement. We discuss locking rates. I do fixed rates. I mean, we can do ARMs, but I haven't done those in a long time. I don't know why anyone would do that, but, and then processing. So I try to keep it a 1-point touch contact and then I stick with the whole process, but there is a processor that gets assigned to your loan and they'll do the reviewing, making sure everything's in the loan application before submitting to the underwriter. And then it goes to the underwriter and then comes back to the processor, and she keeps us updated throughout that process as well. Once you get out of underwriting, you are either conditionally approved or approved. Conditionally approved means, hey, everything looks good, but maybe we're missing a few documents. Maybe we're missing a bank statement. Maybe we're missing a pay stub. So we just have to finalize those items. During the processing/underwriting process, we are doing your guys' inspections and appraisals are getting completed and title work's starting to get worked on as well. So that way, usually a couple of days before closing, we can get everything together, balanced, and get you guys final numbers. What I do for you and my final takeaway. Support. I remember my first time I bought a house, didn't really know what I was doing, didn't really ask questions, just kind of blindly was signing. So my goal is just to be here and a resource to help you guys go through this, answer any questions that you might have, make it smooth and easy. Big takeaway, you don't have to be ready, but you just have to be curious. I always tell people to ask the questions, even if you're not looking to buy until a year or 2 years later, especially self-employed individuals, because their taxes are a little bit different. You write off a lot of things, which is great, but it's not great in the mortgage world. So I always say ask away and come talk before you're ready to do that. Preparation creates options. I'm here for the long term too as well. So I think, is that my last slide? Oh, it is. Yes.
So let's say if you bought a house at 6.25%, that was your locked in rate for 30 years. And magically rates drop down to 4% out of the blue. Probably not going to happen, but let's say it does. What would it cost that home buyer with that locked in rate? What would it cost them to refinance with you?
So out of pocket, nothing. When you refinance, So CMG actually has this program. It's called a rate rebound program. And when you close with us, within the first 5 years, if rates go down, you can refinance an unlimited amount of time, and we waive our lender fees and appraisal fees. So that's a little bit of savings right off the bat. When you go to refinance, the fees that you would have to pay are, we do have to reset up a new escrow account for you, and then you would have new titling fees. So I would say, depending on the house, you could potentially be anywhere from, I don't know, maybe 3 to, I say 10 on the high side, but those are bigger loans and stuff. So, and those fees actually get rolled into the loan, so nothing would be coming out of pocket for you. So, and then yeah, it's about, you can probably get it done within 15 to 30 days too as well, so.
Do you guys usually keep your loans after closing or sell them?
Great question. So CMG actually keeps most of them. I'd say anywhere from 80 to 85%. They keep them in-house. Those programs like the NIFA program, the Nebraska Investment Financing Authority, those actually get sold off to U.S. Bank. All of them go straight to them anyways with all lenders, but we do try to keep most of them on in-house. Great. And
my name's Ryan Rourke, Rise Insurance, independent insurance broker. So yeah, here we go, right? Why is this dude talking to me today? Well, I've been in insurance for about 10 years. I've been in the health side at first. Actually worked on the commercial side, placing businesses with health insurance, life insurance, and ancillary products. That got kind of crazy for me, so I swapped over to property and casualty about 8 years ago. Been doing that ever since. I've worked for a couple of big carriers in my time, captive agencies, and just recently decided I was going to do my own thing and popped over on the independent side. I'm an uncaptive insurance broker. What's that mean is I can shop out several carriers rather than just your one carrier, like if you were with like a Farmers or a Farm Bureau. Like I said, 10 years in the industry and moved to the independent side last year. One thing about insurance that people really, I'm just gonna spit it out, it's confusing. It literally is. It's almost designed for you to second guess it. Terms sound redundant. So I wanted to preface a little bit and just have a couple of terms that I'm gonna talk about to make sure that everybody's following along well. Premium, that's just how much your policy costs. That's going to be at the end of the day what you're paying in. Deductible, how much you're paying before your insurance kicks in. That's how much you're self-insured for. There's a lot of companies and carriers right now that have a lot of different deductibles, 1%, 2%, and different nominal amounts too. Replacement cost pays to replace a damaged property with new or similar quality item. There's no depreciation there, and that's the difference between replacement cost and actual cash value. Actual cash value pays the depreciation value of the lost item, so it's replacement cost minus the wear and tear for it, and that's your actual cost value. And we'll get into why those are important, but first, when you're going through your new home buy, you've already spoke with Ryan, and then you said, hey Ryan, I like that house, the house is pretty cool, and you call Christina. You guys are starting this process now. You're about to call Chris here in a hot minute, but before that you make a stop with me. These are the 7 coverages. Is it 7? 6 coverages, helps if I can spell, that you're gonna have every single home, every single home's gonna go over. Coverage A is your dwelling. It's the cost to rebuild it, brick for brick. It doesn't have to be brick for brick, but that is the cost that us as agents work to put together to make sure your home can be replaced. Other structures is just detached stuff. I'd say like a shed, chain link fence, or a wood fence, a detached garage as well. Personal property, your stuff. I tell people if you take the home, physically pick it up and flip that sucker upside down, everything that falls, that's your personal property. Coverage D, additional living expense. That's basically if the worst happens and we need to make claim on your home, and repairs need to happen and you can't be there, this is an expense built into your policy so you can live somewhere else while your home's getting fixed. Coverage E is your personal liability coverage. That's if somebody falls and trips and they want to sue you, you have X amount built into your policy right there as protection. Coverage F is medical payments. Those are if somebody happens to maybe fall on your property, if they go and seek out medical attention, like a doctor or a copay, that'll help to pay those kind of things. So this is always my fun part. There's two types of homeowners. Well, there's actually a lot of types of homeowners policy here in Nebraska. There's two that I think are the most common, and those we're going to talk about today, an HO3 and an HO5. So as you can kind of see up here, very similar. Basically, your HO5 is getting you replacement cost and open peril loss. So where your HO3 is really your personal property is all going to be at actual cash value. So you're not getting any depreciation. So if your TV was from 2018, you're not getting a like TV today. You're getting the value of that 2018 TV that crapped out on you. Loss must be from a named peril, like fire, falling ice, those kind of things. Where an HO5, typically it's on you or it's on the insurance company to prove that they don't cover the loss. It's kind of a slick thing. Slimmer coverage on a HO3, it's great for standard coverage. I sell both of these policies. HO3s are great for folks that really just need to get the loan out and they want to make sure they have all the basic coverage. They're not bad for first home buyers, but really we just need to make sure we have a complete understanding of what's covered and what's not. Because on your HO5, your comprehensive coverage, those suckers are really taken care of. You have business liability expense, you've got just a lot of additional coverages added to that, fraud and identity theft, those kind of things. So what is important? There's basically three things. Your physical home, your location, and you. Pretty cut and dry. Physical home, how old is it? If it's pre-1950s, we might run into some extra paperwork we got to do. There could be some extra cost added. Some carriers don't like the fact that you have an older home, and they bake a little extra premium into that. Plumbing, HVAC, and electrical. Those are three big ones. If you have an older home, we're always going to be asked, I believe it's before 1970 now, when your HVAC has been last replaced, if your electrical has been replaced, and if your plumbing's been replaced. A lot of reasons behind that. Obviously, if you have a house that has like the old screw-in amp style amperage or electrical, it's not going to work well. They're going to really charge the heck out of you for that. Condition of home's another one. Roof, are the shingles turned up? Are they deteriorated, missing? What's the exterior look like? Is the siding looking good? Is there any disheveled around the house? I actually have all but one of the carriers I work with all have aerial views and take a picture of your home, and they all have them on file. And if there's stuff on the outside of the house, there's a couple carriers that will ask that you get pictures to verify that stuff isn't there anymore. So they really dig deep. Quality of the interior, obviously a big one. For us, there's economy on up. A lot of nicer homes are, if they have higher end countertops, tables, and those kind of things, we'll kick that cost up. For a lot of basic homes and homes that aren't ritzy ditzy, we like to stick them at economy. Your roof is probably the biggest thing you're getting rated on besides really you and your location. Here in the state of Nebraska, we swap out between third, fourth, fifth places across the nation as far as highest rates go and claims. And a lot of that comes out of the roofs because of the storms we have. 2024 did a number on us for that. Last replacement is big. Is it within 15 years? And what type of shingle? Do you have a Cat 3 or a Cat 4 shingle? They're a high impact shingle. Or do you have a really old shingle that's barely made anymore?
What about like slate roofs? Like
They're
the
all,
1930s,
So it depends on what company actually. Some of them take them, some of them don't. I know it's not the same, but I did a wood shake quote last Thursday, and it was like $8,000, and it probably would have been maybe 2 or 3 if it was just a normal house. Good.
So if, over the next few years, if Nebraska doesn't get, these huge hailstorms that we've gotten the last few years, let's say the big storms for the next 3 or 4 years, do you see insurance rates dropping, or are they staying where they're at?
That's a good question. If you think your insurance is ever gonna not go up, you're crazy. Every year, almost every time it goes up. I do see flat renewals, but if you're a customer longer than a couple of years, you're probably gonna get an increase. But to a certain degree, yes, if there isn't a lot of losses, there shouldn't be a lot of reason for a lot of rate increase in the area. 2025, a lot of those rate increases almost all came from those 3 months we had in 2024. We had those derechos and the tornado out in Elkhorn. Almost all, and the start of the year we had a flood. And it wasn't even in Omaha. It was in January, and it flooded some areas. So yeah, it can. And if we have some quiet years, hopefully it'll maintain. If we have a lot of years with a lot of losses, though, it could go up. Second, your location. What zip code you in? That's a big one. There's certain areas of town that are built in certain time periods. Some of them are not in code yet. And once they get touched and redone, they're brought up to code. Insurance companies know these things. They have a lot of information on your zip code and really probably on your home as well. They're looking for cat losses by zip code. What does that mean? That means catastrophic losses like last year in Elkhorn area, the 68022 area. Those rates, I'm sure, went up quite a bit in 2025 because of those zip codes sustained such high losses. Distance from a fire department. That is a really quick way to have a high rate. And it's something that you don't really think about, but you can't control, but you kind of can. You pick where you buy the house, no one thinks about it. If you're far away from a fire department, you're going to pay more in insurance, for sure. Also, if you're on a floodplain, some areas of Nebraska. Yes?
Is it true if you have like a fire hydrant in front of the house?
Yeah, distance from fire hydrant can help. And by the way, it's not all carriers that are like this. Most of them. Some don't, some do. Did you have something? No. Yeah. You're the last one. Credit score, insurance score, claims and previous losses. Credit score's pretty, cut and dry there. Most people don't know that you have an insurance score assigned to you. Not every company gives you an insurance score, but you have one. On-time payments matter. How often you change carriers. If you're with me, unless I have a reason to move you, I try not to move you, because the more often you get moved, the worse your insurance score is. And lapses in coverage are bad. You are automatically going to come out of the gate with a percentage surcharge on your account if you have a lapse in coverage. So just know that. Claims and previous losses. Depends on what the loss is. But here's the thing. If you have a water loss, if you have more than one water loss, you're probably going to get dropped. And if you have just one water loss, there's a lot of carriers that will still drop you for just having one water loss. It's a big problem for a lot of insurance companies. They don't like them. Auto losses can contribute. Most times they don't, but I put that in there just, I've only seen that happen one time, and it was actually a property thing, so not overall. Well, what else? Watch out for exclusions. There are some companies out there right now that are telling you that they'll cover, or they won't cover the soft metals on your home. So like gutters and those kind of things, because functionally they're fine. However, they might look a little dinged up. So you gotta be careful for that. Service line coverage is another big one. Most people don't know this, but the sewer line from your house to your street is your responsibility. And that sucker can and will have roots, get backed up, cause a problem. It happened to a really close friend of mine down the street. And it was like what? He said it was much cheaper, like $9,000 or $10,000. But it's a lot, and it's all on you, and you got to do it, and you have to do it. By the way, there's no way around it. It's a sewer line. So, roof payout schedules. So most carriers have at least 10 years of replacement cost protection on your roof. Some of them will do full replacement cost for that 10 years. Some of them do 15 years. Some of them will have pay schedules. Well, they'll say after a certain amount of time, we'll pay 80% or 85% or 70%, usually based on how old your roof is as well. Swimming pools and trampolines, insurance companies hate both of those things because that's to deal with losses. Kids bopping up and down on trampolines and, people drowning in swimming pools. We only look at the negative in my side of things. However, if you have gates and fences around those things, they're pretty easy to get around. Water backup coverage is a good one to have. It's a good time to be honest with your agent and really tell them what you might have in your basement. Talk about, I do have this area is finished, so I can make sure I have enough coverage baked into your coverage there so that if something does happen, you are taken care of and we can make you whole again. Last thing is jewelry, guns, and collectibles. Insurance policies overall really don't pay out too well for a lot of these things. They're standard payouts. You can schedule these items with certain carriers. You pay a little bit more to do that, but it's what you need to do to make sure you get the proper payout. If it's a wedding ring or something like that, they're gonna a lot of times ask for an appraisal. I actually put them with a separate carrier just in case, so that if there's ever a loss, like God forbid you lose your wedding ring or something like that, it wouldn't be under your home insurance and you wouldn't take a surcharge for making a claim, because at the end of the day, every time you make a claim, you're going to get surcharged. I think that's about it for me. So just in closing, Ryan Rourke, Rise Insurance. I work for the client, not the carrier. And I'm, always willing to talk to anybody about insurance and here to help. Cool. Next.
Well, welcome back, everybody. My name is Chris Moynihan. I'm here to talk to you about home inspections. So after you talked to Ryan and Christina and Ryan and got all your quotes put together and identified the house that you love, my job is to swoop in and kill the deal. No, just kidding. My job is to look at the house and tell you kind of what's going on with it and give you an accurate picture of what the current state of the home is. We're going to talk a little bit about home inspections and what I do and how to kind of evaluate your home inspector if you have one already picked out. So I'm an InterNACHI certified professional inspector. I was a commercial superintendent for years and a residential superintendent. That means that I was in charge of building buildings for many years. I've built a couple of hundred houses, and I've built a couple of big industrial facilities, as well as Class A office space and a smattering of other commercial properties. So I have experience as an inspector in the Omaha market with both buyers and sellers. So I do pre-listing inspections and I do buyer inspections all the time. That's kind of my jam. And so I have a good amount of experience here in the Omaha market and getting more every day. So home inspectors in Nebraska. So Nebraska requires no training for home inspectors. Isn't that wild? Yeah, so in Nebraska, all you have to do to become a home inspector is give a $300 fee to the state and show that you have a general liability policy. So it's really important that you evaluate your home inspector and ask them what their qualifications are. We're a registration-only state, so there's no minimum education standard. But there are several organizations that a lot of inspectors go through. Yes?
Do the big home inspection companies have additional requirements for those guys?
No. Yeah, so there's no state requirement. So like some of the companies have like minimum requirements that they require. They'll require you to be an InterNACHI or an ASHI inspector, whatever. And most home inspectors in the state do go through some kind of training. But it is literally, to become a home inspector, all you have to do is show that you have a general liability policy and register with the state. So you could show up knowing nothing and say, I'm a home inspector and go to business. It's pretty wild. Yeah.
So, does a loan officer look at that? Like, okay.
Not at all. So that's why it's really important that you kind of evaluate who your home inspector is. There's a couple of different organizations. InterNACHI and ASHI are probably the two biggest ones. So that's the International Association of Certified Home Inspectors and the American Society of Home Inspectors. There's another one called AHIT that's kind of a startup. They do a lot more in-person trainings. And then there's a couple of other organizations that all kind of provide their own training. Inspectors may or may not have a background in construction. There are a lot of inspectors who start off as inspectors. They go apprentice with somebody or they go on a ride along and they learn how to do just inspections. They may or may not have ever built anything. And so it's kind of a wild world that we live in. Okay, So let's talk about what your home inspection is. It's a visual inspection of the structure, systems, and safety of the property. So we're looking at your roof structure, your foundation, and then the mechanical, electrical, and plumbing systems. And it's a chance for us to look for like the material issues. So we call those material defects, or like things that will impact the value of your home. So I don't care that there's a stain on the wall. I care what caused that stain and whether it's still active. I don't care that there's like a nail pop. I'm caring like, hey, what's going on with the foundation that we have nail pops? Stuff like that. That's going to be a material issue as you guys are moving forward. It's not pass fail, and it's not like a gotcha for the buyer or the seller. It's not a chance for them to be like, ha, I knew you were hiding something. It's not a to-do list, and it's not completely comprehensive. There are things that we can't see unless you open up a wall, and destructive testing isn't usually part of a standard home inspection. So if you have a sneaking suspicion about something, there are some things that we can do, and I'll talk about those here in a minute. But there's basically, we're looking for anything visual that we can see that might be an issue. So inspections matter for home buyers because it's protecting your interest, right? You're about to make probably the largest purchase that you've ever made in your life. This is a good time to go ahead and do some due diligence. I joke that I find people that will take their car that they're buying and they'll take it to their buddy who's a mechanic and like have them go through it, but then they'll waive their inspection on their house, which is purchased 50 times the cost. It's a good chance for you to protect your interests. It reduces your liability and it reduces the amount of surprises that you have. It gives you some insight into potential future issues or future costs that you might encounter. You know, things like garage door openers, furnaces, water heaters, things that are going to be an expensive fix. Those are things that we want to look at. And it gives you kind of an idea of what the current state of the home is. Hey, maybe everything's functioning great right now, but we want to make sure that you have an idea of what's going to be coming around the corner. My goal is to help your deal from falling apart. I don't want to come in and be a wrecker. I want to make sure that you get in the accurate picture so that you can go with your agent and then determine, hey, what's our next steps? Do we want to really fight for this? Do we not want to fight for this? Are you okay with this? Are you not okay with this? Give you the best options that you have moving forward. So your role as a buyer, you have to schedule and pay for your inspection. Usually that means talking to your agent. Usually, probably 9 times out of 10, agents will call me and say, hey, can you do an inspection? Here's the timeline that we have, and I'll give them some availability dates, and then they'll coordinate with the seller's agent to make sure that we can get in there and do what we need to do. But ultimately, paying the inspection usually falls on the buyer. My pricing goes anywhere from 15 to 20 cents a square foot. That's fairly common here in the Omaha market, but you should probably plan for anywhere between $350 and $600 depending on the size of the house that you're looking at and what things are important to you as like add-ons, and we'll talk about that here in just a second. The second thing that I ask that you do, and I will say it again at the walkthrough, is read your inspection report. You'll get a summary that'll have just the defects, but reading through the inspection report, make sure that you understand everything in it. And then I'm always available for phone calls or emails to answer questions about the inspection report. If you have a question, call me. I'm happy to explain my comments. And then the last thing, oh, sorry, go ahead.
So, this might be silly, but what if I just say, I just want you to inspect the kitchen because I feel like something's weird? Would you do that and only charge for that square footage?
Yeah, so I have what's called a 4-point inspection. So I'll literally come in and say like, hey, what do you want to look at? And we'll go ahead and take a look at it. It's $125. And basically you get me for an hour to go, hey man, this thing's kind of weird in my house. Can we come take a look at it? And I'm happy to come and walk you through, hey, things look good, things don't look good. You know, the range anti-tip is never installed. And so let's talk about why that's important and give you kind of a heads up on what's going on. Yeah, yeah. The last thing is determine what's important to you. So like, hey, you know what, the electrical system is we have to get that fixed. Or, you know, we really hate that the roof needs to be replaced before we get it for our insurance or whatever. Like determine the things that are kind of your deal breakers and know those ahead of time so we can talk about them specifically, because there are some things that I think are more important than others, and I will mention those. But if there's something like the kitchen that, you know, hey, what's going on with this side or the other, I can spend a little bit more time on it and make sure that we're covering it for you guys. Optional services with home inspections. So I have a whole list here of things that I offer, but there's different things that different inspectors will offer. The most popular one here in Omaha is probably the sewer scope. And that's basically, we look at your service lateral that Ryan just mentioned and make sure that it's good and clean and no major breaks. And some of the older houses like South O or even pretty much anything east of 72nd Street or so is old clay pipes. And so sometimes if there's a big tree in the front yard, there's going to be roots. Usually we can get rid of those with hydrojetting and just kind of being on a regular maintenance schedule. Sometimes there's breaks, sometimes there's asbestos lined pipes, things that won't necessarily cause you a problem, but that are expensive to replace down the line. Airborne mold sampling. I just ran into this at a house I was looking at today where they've got mold in the ducts, and so they want to know what the cost is to remediate. They did a remediation, and now they wanted to go back and test to make sure that it was all taken care of. So we do mold sampling. We send it off to a lab. I use a lab out of Utah or a lab in Houston, depending on what's going on. And either one of those guys can tell me, hey, here's all of the information on the molds that's in your house. Infrared thermography, so we can look in new construction particularly. This one's popular because we can look through and look for insulation gaps in the wall, or like situations where, hey, maybe there's not insulation in the attic and we can't access it for whatever reason. We can use an infrared camera and go through and look at your house and determine kind of what's going on there. Radon testing, Nebraska has radon. Does anybody know what radon is? Go ahead. Cancer-causing gas is one of the noble gases. It's a radioactive gas, comes through the soil. Most often in Nebraska, come through the sump pump. So if you don't seal your sump pump, you probably have radon in your basement. It is the #2 cause of lung cancer in the United States behind smoking. So there you go. Anything over 4 picocuries per liter, there's just a fun thing you probably haven't thought about since high school, is considered actionable by the EPA. And in new construction in Nebraska, it's required to put a passive mitigation system in. Mitigation systems usually like $1,500 to $2,500. And so if you have radon in your basement and you spend a lot of time down there, it might be worth looking into getting a test done to make sure that you don't have a lot of radon down there. The last one is one that's not super popular here, is meth contamination testing. I did it a lot when I lived in Utah, and that's because out there they had a string of Airbnbs that people cooked in, and so if your house had ever been a short-term rental, it was considered like, hey, you should probably get this done to make sure that you don't have methamphetamine contamination in your house. But there's a whole laundry list of services, and different firms offer different inspections. Some people offer like wood destroying insect, and if you have something that's necessary for your loan or necessary for your insurance, give me a shout. If I don't do it, I probably know somebody that does, and I'm happy to get those arranged for you guys. Yeah.
About radon. Okay,
Sure.
so besides having a sump pump, is there other criteria?
Do you have a basement? That's it. That's literally the criteria. Yeah.
Radon tests?
So I tell people there's a couple different ways that you can monitor it. If you want to pay for a radon test, they take about 3 days, and they'll measure it for those 3 days and give you a reading for those 3 days. The other thing that I can do is I can shoot you a link to a continuous radon monitor, and it's a little device that goes down in your basement. It has an app that goes to your phone, and you can actually watch it for 30 days, go up and down, and determine like your 30-day rolling average. And it will continue to give you a 30-day rolling average for as long as you have the monitor downstairs. It's about $150, but the cost on a radon test is $135. So it's worthwhile. If you're concerned about it, that's probably the way that I'd recommend going.
Would you recommend, because I've seen at-home radon tests.
Yep.
So is that reliable, or is it better?
Those are activated charcoal tests most of the time, the ones that like hang in a little envelope in your basement. Yeah, those are activated charcoal tests, and they'll give you a reading as well. Yeah, they're considered an accurate testing method. Yep. Yeah, shoot.
So if there are things to be fixed, like for a particular loan or for a home insurance policy, who tells the buyer what needs to get fixed? Buy this house unless this is fixed.
Yeah, that's a great question. So, for example, FHA and VA are probably the 2 most common ones that you see things need to get fixed for. Those both come from the FHA or VA appraiser, and so their job is literally to come out and they're inspecting those specific items that are specific for the criteria for that specific loan. So your general home inspection, usually, most of the time, the lender won't use your home inspection for those criteria. They have their own inspector. It's a separate license that comes out and looks at those items. That will be a negotiation between your agent and the seller's agent to determine where those items are going to get fixed and who's going to pay for those repairs. Likewise, in my reports, you can go through and say like, hey, this is really important to us. Is the seller willing to fix this item? And that's something that you and your agent can work through. So that'd be something for Ryan and your seller's agent to determine, hey, there's an old Federal Pacific stab lock panel. We know that they're a known hazard. They cause house fires. It's 1 million years old. We wanted to get it replaced. We want a $2,500 credit, or we want you to repair it before we do it. And so that's a negotiation, because like some buyers prefer to get a credit because then they can go get their contractor to come in and do it. Some buyers prefer to have the seller take care of it, and then the seller can go out and find a contractor and provide a receipt for the item that got fixed. Yeah. Another question? Go ahead.
Okay, going back to the radon.
Yeah, absolutely.
That's got me
Yeah.
thinking. So, is it safe to say if you have a basement and a sump pump, you probably have it, a little?
All of the tests that I have done in Nebraska have come back above 9 picocuries per liter if they don't have a mitigation system. So if you have a basement that's not a walkout, chances are you have radon in your basement.
What would cause, or what would happen to cause me to be like, oh, maybe I should get it checked out? Like,
So it's a colorless, odorless gas that you can't see, smell, or feel. So like the first indicator that you have some kind of adverse effect would be you get lung cancer 30 years from now. That's your sign. So yeah, that's your first sign. Honestly, so like I said, a continuous radon monitor is only about $150. If you're concerned about it, if it's something that you like have tingling in the back of your head, and then a mitigation system is only about $2,000. Most of the time, like I usually recommend Radon Pros or Jerry's waterproofing. They do a good job. They're anywhere between $1,500 and $2,500, depending on like what all they've got to do. They're not terribly expensive if that's something that concerns you.
Answer your call after hours.
Radon Pros will? Yeah. Yeah, and they like Radon Pros is who I use for my measurements for that, because I don't want to get the license for it, so it's fine. Yeah, any other questions, comments?
I have one more.
Yeah, shoot.
Okay, so there's pre-inspections, there's homes that
Right.
are pre-inspected.
Correct.
Should you still, when would you like recommend a buyer get an additional inspection?
Ooh, good question. Okay, so I tell people two things. One, you can do for information only. So you can still like say, hey, you know what? I don't trust their guy. I don't like their guy, whatever. It's like there's a couple of companies here in town that I don't like to poo-poo other people's inspections, but like they're not necessarily as thorough as I might be. My pre-inspections, I treat the exact same way as I do my buyer's inspections. I go through, I look at the exact same items. I don't give anybody like a break because they're using me for a pre-inspection, which sounds horrible, and that's why a lot of agents don't use me for them. But there's other people that they say, yeah, you know what, we had this company come out and do it. If you talk to your agent, most of the time they know who those companies are that do like a good job and not a good job. That's option one, is you can say like, I want to go ahead and do it for information only, and we can just have it, and we're not going to use it for negotiation purposes or to like walk away from the deal. That's option one. Option two is say we don't want to waive our inspection contingency. We want to go ahead and get an inspection anyway, and the agent can give you a yay or nay, thumbs up, thumbs down on that. Option three, and I tell people this is probably the most popular option, is saying, you know what, we're willing to take your pre-listing inspection at face value, but we want to go ahead and get a sewer scope, or we want to go ahead and get, like you can do some of these additional services and use your inspection budget for those items. So that's why I usually tell people, like, go ahead and, if you have $500 saved up for your inspection, go ahead and get a sewer scope. It's $250. And if you want to do mold testing or something else, you can use your inspection budget for those items and say, hey, selling agent, we're willing to take your pre-inspection, but we want to go ahead and get a sewer scope as well. So that's an option as well. Yeah, great questions. Awesome. Well, I think that's all that I had. Yeah, so let's work together. Give me a shout. You can call, text, email, send smoke signals, whatever. Most of the time I'm pretty available. And then, yeah, if you just give me a shout and give me the address, I can get you a quote on what it will cost to get it inspected. But wait, there's more.
There's more. Before I get to the wait, there's more. I just wanted to follow up on the appraisal/inspection question. Once an inspection's done, let's say that you're buying a home and you get an inspection done, and let's say the furnace is going to go out. Well, that little property disclosure form, if the seller didn't know that the furnace was going out, well, now with this inspection, they know it is. So even if they try to tell you, I'm not going to replace that furnace for you, guess what? The next buyer is going to know that the furnace needs replaced, and they might have to do it for that. Same thing with appraisals. If an appraisal comes and the appraiser is like, well, it's worth X amount because of XYZ. Well, that appraisal is going to stick as well. So even if you walk away as a buyer, the next buyer, if it's also an FHA loan or whatever, that appraisal is still sitting there. So the seller's still going to have to address the issue, whether it's with you or the next buyer. So it's not something they necessarily get away from.
So then if it was a home you're selling, you're the seller's agent, then they would have to go back and update the seller disclosure form.
Correct. If they know, if the inspection said the furnace is shot,
The whole thing fell through, like the deal fell through, you still have to make.
you have to update the property disclosure because you can be held liable for 7 years after the sale.
Hypothetical situation here. Let's say you're buying a house, it's under contract, you get an inspection, and the roof is shot. it has 5 years of life, let's say, and it's going to cost $30,000 to replace that roof. How often do you approach the seller as the buyer agent? Do you say, hey, we want a price reduction or a creditor closing for $30,000?
Usually, it's happened a few times on deals I've been involved with, and usually we ask them to file a claim with their insurance company. There's a deductible involved that maybe we meet halfway on or something like that. But again, once the roof is noted as being trashed, you can't just pretend it's okay and think someone else is going to buy it without knowing it. It's you know it. You have to put it on the property disclosure at that point. Good question.
I might be able to answer everything.
Yes, go ahead. And then actually, the sewer question. Okay, the sewer question one more time, because that's where it cut off. If I get a sewer scope done and it's super clean, good as new, are you going to give me a little bit of a break on my homeowner's insurance?
Sure. The long answer is no.
Okay.
And so is the short answer.
Okay.
They don't do anything for that.
Cool. All right. And you had something you wanted to add, Christina?
Yes. Nope. Okay.
There you go.
So renovation loans. So in question to your roof, let's say you went back to the sellers. They said, nope, I don't want to give you any more money. I don't want to file a claim on my insurance. Figure it out yourself or get lost. We actually have this program. It's called the renovation loan. And what we can do is look at financing basically the roof into your loan. You can do anything from roofs, back porches, kitchens, new appliances, paint, just carpet. It doesn't have to be like everything. It can just be certain things. So what this program is doing is helping you build equity sooner. You can use it with a FHA, conventional, and a VA loan. So those are our available options. And like I said, anything from kitchen remodels to bathrooms to, I know they did mention that you could do pools if you wanted to, and anything from very minor, like let's say you have an FHA loan where doesn't have appliances and you need those, we could actually finance those into the loan as well too. So any houses that just maybe need a little TLC that have been around for a little while, just to chat with Ryan and he can help you imagine, I guess, is that the word I'm trying to think of, on what it potentially could be, and then getting those ideas placed into a bid and being able to use this program. Improvements increase the value. The loan looks after renovations are completed, and that's what we'll be closing on. It's a one-time close. You don't got to do anything afterwards. You close on the loan, and then the renovation part starts. Let's say you get called out on things for like FHA on the appraisal. We can just let them know that, hey, these items are going to be fixed. They don't need to be fixed before closing like normal, and you can do it as part of the renovations too. So I think that's all I had on this one, didn't I?
Yeah, and I was just going to
yep.
add on to it if I could. So this is an example. This is actually a house I showed a client yesterday, a young couple. They're first-time home buyers. It's still, for sale as of today, but the inside was mid-flip, and then the owner had to walk away from it for financial reasons. And so most of it was done inside, but the outside was where a lot of the issue was. All the siding was completely rotted out everywhere. It had to be replaced. And this house had been sitting on the market since July. They started at $260. Kept canceling, relisting, trying to get more attention. Price drops. Right now it's at $245. I think it may sell for $235, $240 maybe. But with the siding just being the main issue, it had newer windows, it had a brand new roof. Everything looked great inside for the most part, except for the siding seemed to be the big issue. If you can get this home renovation loan, a lot of people are going to look at that house and be like, I don't want to deal with the headache. Or maybe the inside isn't updated. They don't want to deal with it. Well, you're kind of at an opportunity where you're competing against less people for that home. So you don't have to overbid or hyperbid or any of that bidding games that happens with a popular listing. You can come up and maybe go under a little bit. And you have in your back pocket this idea that you can kind of renovate it after you own it. So this house, you could put new siding on it. I'm gonna ballpark like 10 grand for siding all the way around on this house. Well, if you bought it for 240, 245, put 10 into it for siding, then all of a sudden that you have a house that is maybe worth 285, as a rough guess, looking at the comps in the neighborhood. So you're getting like instant equity by taking on this fixer-upper that nobody else wanted to deal with. And you didn't have to come up with that cash out of pocket. That's why I love the option that Christina has with those CMG loans for those home renovation loans, because especially if somebody's not afraid of a little sweat equity, a little bit of work, you know, you have Chris go in there and make sure the foundation's not collapsing or something like that, nothing major. If it's just more cosmetic stuff, then that's easy to live in there and just take care of it while you're living there, and you get instant equity right off the bat. So I'm a big fan of those loans for sure. And this is just one example. Obviously numbers are going to be different for different houses, but kind of gives you an idea of what you can do. What questions do you have? I had one other question for Ryan real quick here. If I'm shopping with somebody and we're looking at a house like that one, let's say, can I just call you and get a quote on it before we even put an offer in?
Yeah.
Yeah.
I need a little information, but yeah, absolutely. I work with Christina and other lenders as well to do that prior to, so they can get a good idea of what that looks like.
Okay. Any other questions?
Question for you, Christina.
Why don't you come up with the microphone? So.
From start to finish, let's say I give you a call and I want to start looking at financing options. From start to finish, how long does it take to have that initial phone call to get the final approval? What would you say on average?
Well, are all your ducks in a row?
Yes.
Are you a W-2 employee?
No.
So you're self-employed. I would give myself at least 2 days to make sure I fully look at everything and feel confident that I've got your numbers ready to go. If you're a W-2, I would say 24 hours. I actually honestly it was a Friday night. They called, they're like, we want to get pre-approved. I was like, okay, give me all your stuff. Within an hour I had everything. Then within an hour I had a letter out to them and they were making offers. So I can move quickly if you guys move quickly. Self-employed is just a little bit longer, so I just would need to make sure I've got all your docs and stuff, so.
Us self-employed people.
So,
Okay.
perfect.
We'll put all this information, when we post this video online, we'll put it in the comments or whatever, that you can reach out to any of us with any questions at any point in time.
Thank you.
All right.